Every year, Forbes magazine prints the Billionaires' Rich List. It's a big list of all the billionaires in the world right now. Now, the truth is, many of the top billionaires have chosen real estate as their vehicle to build wealth. And it's for a very good reason. Welcome back, guys. Nathan here. And in this video, I'm going to be showing you why property just might be the ultimate investment. Also, stick around to the end of the video because I'm going to be showing you not just how to get a 10% return on your money, not a 20%, 100%, or even 1,000% return on investment. I'm going to be showing you how to get an infinite return on your money using property. As always, if you find anything in this video useful, be sure to click that like button. That would be much appreciated. Okay, sit back and relax, guys. Here is what you need to know about investing in property. The 5 reasons why property might just be the ultimate investment. Number 1, asset appreciation. So this is the house that we're going to be using in our example. It's a 2-bedroom house, but it could be anything. It could be a 4-bedroom house or a 200-unit apartment building. Simply add or remove zeros onto these numbers to scale up or scale down. So our house costs $250,000. I'm working in dollars because it's international, but this could be pounds, euros, just add your own currency. Now, on average, house prices go up about 5% a year. In some places it's a bit more, in some places it's a bit less, but on average, house prices are going up 5%. So my question to you is this: how much is this house going to be worth in 30 years? And the answer is over $1 million. Number 2, leverage. Getting high on opium. No, that's not what you think. That's other people's money. So we have our house of $250,000. However, it's not going to cost you that much. You only have to find a down payment of, say, 20%. So you're only actually paying $50,000. And this means the vast majority of the money, 80%, $200,000, is coming from the bank. So you're leveraging other people's money. Also, let's break down the mortgage. So that means the bank's lending you £200,000. So let's say it's an interest rate of 3%, the term is 30 years. This means your monthly payment is going to be $843. Now, you can rent this place out for $1,200. So not only have you got a house that's going to be turning into $1 million that's being mostly financed by the bank, it's also being paid off by other people. Number 3, passive income. So we have our mortgage of $200,000, interest rate of 3%, term 30 years, and the monthly payment is $843, and we're renting it out for $1,200. So that means the rent is more than what the actual mortgage payment's going to be. So you make $357 in passive income. So not only have you got a house that's going to be growing to $1 million, not only has it been financed mostly by the bank and paid off by other people, you're also making $357 every single month. Number 4, instantly add value. So we know our house, the value is $250,000. Well, you know it's possible to overpay for a house, right? You could have not done your research, you could have been caught up in a bidding war and ended up paying $280,000. Well, the same is true on the flip side. So of a house of $250,000, it's also possible to buy it below market value. And there's a number of ways that you can buy below market value. The sellers might not have done the research. There could be bereavement, there could be divorce, you could be buying it at auction. There's many ways that you can buy below market value. So that means as soon as you buy your house on day one, you could have made $20,000 profit. Also, let's say you've bought an average house in a very good area. Well, there's things you can do to instantly add value. How about repaint the house, put some carpets down, improve the bathroom, put in a new kitchen, add an extra bedroom, convert the loft. There's many things you can do to improve the house. So we have our $250,000 house, and we're gonna do some renovation. So let's say you've spent $10,000. The house is now valued at $280,000. This means you've made a profit of $20,000. Number 5, tax benefits. There are many tax benefits to real estate. Here are just a couple. So the mortgage payment was $843. The rent, remember, was coming in was $1,200. So that means you were making a passive income of $357. Well, in the tax law, passive income is a lower tax rate than earned income. So you're getting an instant tax saving. Also, let's say this house is your personal residence and you bought it for $250,000. Well, in 5 years from now, growing at 5%, your house is going to be worth $320,000. Well, you can sell the house and you have made $70,000 and it's tax-free money. There are many tax benefits, including writing things off as business use or even depreciation, but I'll save those for another video. Time for the bonus: how to get an infinite return on investment from real estate. So you bought the house for $250,000. Well, you actually only put down 20%, remember? So you only put down $50,000. Well, after 4 years, your house would be worth $304,000. So you can go back to the bank and refinance, so remortgage on the new amount. And you can pull out $50,000, which was the money you've actually put down. And because this money is debt, it's also tax-free. So let's just summarize the infinite return on investment. So you now have a property that's going to be growing to $1 million. You're making passive income every single month. You've refinanced and you've pulled out the $50,000 that you initially put in. So this is now a completely free investment, meaning your return on investment is now infinite. And this also gives you options. You can now take this money and just repeat the process, or you can just enjoy this house and keep the money. So there you are, guys. You now know why property just might be the ultimate investment. Wow, watching all this through myself, it makes me really want to buy another property. So the truth is that real estate gives you everything you could want as an investor: compounding, leverage, passive income, tax benefits. What else could you want, right? Okay, if you found anything in this video useful, be sure to click that like button. That'd be much appreciated, as it does really help out the channel. If you haven't yet subscribed, be sure to click that subscribe button below, as I've got some great videos coming up that you don't want to miss. And tell me, what do you think about real estate? Do you think it is the ultimate investment? Let me know in the comments below. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.